Secretary-General of Thailand's largest opposition party says he supports the government's decision to remove capital controls and boost domestic demand. But Korn Chatikavanij says he sees room for more improvements.
On the stimulus package, I think that there are rooms for significant improvement, both on the consumption side and on the investment side. On the consumption side, the government recently came out with a tax package, tax reduction package, which was going to cost the government upward of 40 billion baht, that's over 1.2 billion US dollars. Unfortunately, we don't think that the impact that package would have on consumption will be significant. Number one, a number of the tax savings was actually designed to stimulate savings in pension funds and in life insurance policies and so on and so forth, which actually will have the opposing effect from the government's stated attempt to stimulate consumption. So I think it's a bit misdirected from that perspective. Secondly, the impact on the economy will be delayed because benefits of the tax package will not be felt until the end of the tax year. And thirdly, the beneficiaries are limited to those who are already generating relatively high income. There are about 36 million workers in Thailand in total, of which 6 million only pay income tax. And it's those 6 million who will benefit. So what the Democrat Party has done, and I went to see the Minister of Finance last week at Government House to deliver him our proposal, is for the government actually to come to Parliament and ask for a supplementary budget of another 50 billion baht, just under 1.5 billion US dollars. That would be used for measures which would deliver funds directly into the hands of the general public who are in greatest need for these funds, which will mean, number one, a higher level of equality. Number two, most importantly, they have a high propensity to consume, which will mean a direct stimulus to consumption levels and thus level of economic growth for the country. So the government is in the process of considering our proposal, and hopefully they'll make up their mind very soon because we don't have much time.
It's early days yet, but is there a sense perhaps that foreign investors believe in the story that the current government is on track?
I think the foreign investors want to believe, and unfortunately, what foreign investors have been focusing on is the government's investment projects as a major stimulus for the economy. And unfortunately, there again, the signal has not been entirely clear. The government's talked about a couple of significant investments in mass transit, in the railways, in irrigation, but specifically each project, when you look at the detail, the likelihood of success of implementation is being questioned. The amount of money that the government needs to use is being questioned in terms of where it will come from. And the execution time also is being questioned. The government, for example, is talking about building 9 mass transit routes, totaling 300 kilometers, and promising it will be done in 3 years, when most of them haven't even received economic impact assessment approvals yet. Frankly, it's completely unrealistic. And for the government still to be proposing projects and implementation periods that is so obviously unrealistic is a cause for concern and is affecting the level of confidence that people might otherwise have had in seeing these projects being pushed forward.
The time frame may be unrealistic, but when we spoke to Thaksin, he said that to revive the economy, you need to implement those mega projects, in his words. Is that something that you agree on?
Absolutely. As I said, we have some common grounds of agreement, and definitely one of them is the need to effectively implement these investment projects, which is why we think it's a pity that the government hasn't properly prioritized these projects, hasn't talked about how to fund these projects in a coherent manner, and hasn't talked realistically about timing in terms of when investors can expect these projects to be implemented. And it's interesting that it should be Thaksin that's talking about this rather than the Prime Minister, and that's another part of the problem.
You were tipped to be the finance minister had the Democrat Party led the coalition government. What's your take on the strength of the baht?
Well, the baht against the US dollar is likely to continue to strengthen, not least if interest rate trends in the US is as economists say it might be. But the baht against other currencies has been quite stable. And in fact, ever since the capital control was imposed, the baht has actually weakened against the euro, whilst at the same time strengthening against the dollar. And it remains pretty flat against the yen. And those are, the other two major counterparties from a trade perspective with Thailand. So our exporters have, I think, been quite quick to basically find new markets and basically to price their products in other currencies other than the U.S. And we've adjusted relatively well. If you look at export growth over the past 4 months, it's been astounding, really. January, we saw exports growing year on year by over 30%. 3 months prior to that, every month was over 20-year growth year on year. So I think the ability to adjust on the part of Thai exporters has been very commendable. But unfortunately, against US dollars, from the exporters' perspective, baht will probably continue to strengthen.
At what baht level would you be comfortable? What's fair value?
Depends, which hat I put on. If I'm an exporter, I would surely want the baht to be weaker. But
as finance minister,
if I was a consumer looking to procure necessities such as petrol and so on and so forth, I'm very glad the baht has been strong. Otherwise, petrol pump prices would be even higher. From a finance minister's perspective, frankly, I think the ability for the economy to adjust to current levels of the currency has been perfectly sound. So I'm not unduly worried that the baht should be trading a little bit stronger from where we are today. But the economy will need to continue to adjust to it.
All right, Korn, we'll leave it there for the moment. Another short break. We'll be right back.